I'm your host Steve, and today going to be talking about the stock of the week and the 4 stocks looking for next week. The stock of the week that was on the 30th, that was Netflix, and then the 4 stocks that I'm going to be looking at for this week, ending in August 7th, will be Disney, SPY, Bank of America, and Priceline. Alright, so let's begin. I have, just like always, I have the chart pulled up. It's on Netflix. Now, the move that I'm going to be showing you would have gotten in around 10:40, 10:45. We were pretty much just, so I have it set up at that time. It's a little before the signal to get in the trade, but all the information is already up and everything like that. So let's get started. Okay. Now, said what we're waiting for is we are waiting for the MACD to give us our signal to get into a position. So in this case, it will be on the call side. And the price is going for 105.57 at the moment, so I'm going to be looking at the 105, either the 105 or the 105.71 calls. Alright, so I'm going to be getting into the 105.71 calls. Alright, one position, or one contract, I'm sorry. And now I will have this, I'll have this fast forwarded. This was about a 2-hour play. So we will bump this up an hour. All right. So it's bumped up an hour. There was a period here. Where is it? Okay, so here was the end. Here was the entry right here. All right, and then there's a period here, right in this little mess. Or see, now how I talk about the 2-minute rule. Well, okay, so 1 minute. Here's the second minute. It touched. Okay, 1 minute. It touched again. So 1 minute. It touched again. And it kept touching. Alright, 1 minute. And it took off. Okay. So you could have kept in this trade on that alone. Now here was a little different story. Now, let's see. Yep. First minute, second minute. So you would have maybe gotten out here. But now, let's expand our time frame. So this right here would be between 11:25 and 11:30. So let's switch it to a 5-minute chart. Even on that one, you could have stayed in this trade. So 11:25, 11:30. Alright, so now Alright. So there's for that one. Then it bounced. It took off some more. It reached a high of 108.45. It pulled back a little. But again, it's keep meeting the 11-day moving average. And it's still above it. So you would still be in this trade. And right now you would be up $168.50 off of one contract that cost $112. Alright. So this time I'm going to jump it ahead about a half hour. 12. I'll say 12:15. Keep it nice and simple. Alright. So here we are at 12:15. And within this whole time, there was nothing telling you to get out of this trade. And within a half hour, you doubled your money. Okay. I'm gonna have this sped up, and of course the video will be edited, but it will be showing near the end of this trade. It's 12:30, and this trade will be coming to a close in the next couple minutes. Got into it at 10:45 for $112, and now it's an hour and 45 minutes later with a profit of $433. But some of that's going to be taken off. But still. And that, like, this kind of profit is made only by using the MACD as your buy or sell signal, and then using this 11-day moving average as your exit. Now, that little instance back that I showed you, where I put it on the 5-minute chart, and you could have gotten out there for $100-something profit, which that's no problem. But again, I mean, before you get out of a trade, unless it's like a significant down move or a significant, like, you know, you're looking at this chart and you can see that the trend has been broken and now it's going the opposite way, then you go ahead and get out of the trade. But if you think it might have a little more profit, you know, expand your time frame. Now, like this one. Okay, so it's a 5-minute. I know this trade will be coming to an end, though. I mean, it's up $4, 3.7%. I mean, with Netflix, yeah, that's possible. And it can probably even run even further. But more times than not, after a 3.7% move, a stock's going to start having a little bit of a pullback. So, I mean, you can look at the 5-minute chart and then use that as your point to get out, but you're going to be sacrificing about $150, maybe even close to $200 profit by doing so. So, you want to Like, you want to have your target, like a price target. Like, what's your goal for the day? And then, what's your goal for the week? Now, that doesn't mean to, trade as much as you can to reach that goal. Keep your goals kind of on the small side. And don't force trades if you're not meeting your quota. But at the same time, don't be greedy. Like, if you have a daily goal of like $100, then this by far meets it. There's no reason to continue trading for the day. Everyone's different, but that's how you limit, minimize your loss and maximize your reward. Alright, so now it's going to be time to get out of this trade. I'm just waiting for that second candle, which okay, here we go. Alright, here's the second minute. Okay, so bought for $112, ended up selling it for $477. And again, that was a market order, but still, that's not bad profit. If you look at here, I mean, that's a $60 spread, so that's. I mean, I probably could have done a limit and maybe set it for $477. That was probably a good exit price between those two. Alright, so now that we have the trade of the week all done, now it's time to go into the stocks to look for. Alright, first up we have Disney. As I've said in the past episodes, Disney is very bullish. It's continued to be very bullish. They have earnings after hours on the 4th, which is Tuesday. If Disney beats, let's see, it depends on what happens tomorrow, but I would expect it to maybe make its way up to that 121.61. If it beats, maybe 125, 130, maybe 135. If it misses, could see maybe 105, 110. The reaction isn't really big in relation to earnings. But, so that's what we'll be looking for. Again, because the stock is so bullish, if it does do well on earnings, it may take a little longer for a gap fill. It could take weeks or months to fill that gap. whatever that gap is. But if it stays, if the earnings jump and price stays small, then it may not be that big of a deal. But it's continued this bullish trend, and I don't think it will be stopping anytime soon. If Disney misses, that might cause a little bit of trouble, but at this point I highly doubt it. Next is the S&P. Alright, so last episode I had talked about there was a lot of red being seen on the SPY. That was a huge drop, and I had said to look for these price levels, and it managed to bounce before that. Well, if you look, it's a inverse head and shoulders formation. As long as this doesn't fail, we should be getting around, let's see, the 211.99, 212.33, 212.76. Those will be big levels of resistance. But because this is an inverse head and shoulders right here, we could see 213.50, and it could reach up to 215, maybe 220. It depends on how strong, how confident the markets get after this. So I would be looking for the upside on the SPY, at least in this price range that I mentioned of 211.99 through 212.76. If it breaks 212.76, then be looking for the 213.50. Next, Bank of America. Bank of America, well, with the whole Fed talking about the whole interest rate increase and everything like that, it's anticipating that move. But then again, when the Fed doesn't act on it, it starts to fall out a little bit. Bank of America, unless we hear something more certain from the Fed, I could see this getting down to 1765, maybe 1721 for the downside. Upside, 1845 to 1876, but I'd be looking more so for the downside on this until the Fed has a little more certainty. And finally, we have Priceline, which Priceline's earnings are before market open on the 5th. So before market on Wednesday. If you look at this last candle, it's a bearish doji. With that, we could get back down to 1221, maybe 1205, or on the upside, this could be nothing, and Monday morning stocks are up big and this blows past and it hits the 1270 resistance, which I would expect it to be somewhere within 1225 and 1275 range up until earnings. After earnings, looking for a move between 100 and 150 points in either direction. So depending on where Priceline ends up before close on Tuesday, because I believe the all-time high is like 1370. Let's double check real quick. The Priceline all-time high was 1329. No, I'm sorry. Yes, it was 1378.96. Alright, so 100 and 150 point range. So within this range, an 100 and 150 point target move means on the upside, it will at least meet the all-time high. The downside, it will drop down to anywhere between 1050 and 11. Now, again, with any other earnings, if it hits and it shoots up, that's going to be a huge gap fill. That's going to be easy money on the way down. If it fails, though, that could mean trouble, and we could get down as low as 1,000, or the year low, which was 990.69. That's what to look for on Priceline. Again, it'll be nice that the earnings will be before market, so there should be a lot of opportunity to make money on the stock after that earnings call. That's it for today's episode. Hope it helped. Hope it can improve your trading. Still need to get the final word on for the interview, which will be a couple episodes later on in the series. So good luck next week. Hope everyone makes some decent profits, and until next time.